The S&P 500 failed on Friday and lost more than 2.7% within a day. And we knew that S&P 500 will fail. And the reason was clearly mentioned in the previous S&P 500 weekly technical analysis, wherein I have mentioned that because the S&P 500 has hit the absolute and extreme saturation and extreme overbought conditions and at the historical level, this means that there will be a weekly red candle by Friday in the S&P 500 and in the entire US stock market. And the worst case was seen in the Nasdaq, because the Nasdaq lost almost 5% within a day. However, guys, this is not the bubble burst. This is not that heavy fall which is indicating a correction or so. This is just a normal, just a regular fall, and this fall is actually the profit booking. However, we are still expecting more fall in the S&P 500, but everything will remain good and well as long as S&P 500 is holding, sustaining, and all hourly closings are above the low of this candle, that was 7333.68. And before the S&P 500 can give up more, we are expecting some reversal in the S&P 500 and in the entire US stock market because of the saturation on the lower level charts. And why we are expecting this to happen? And for that, you need to understand that on Monday, on 1st of June 2026, the S&P 500 made an all-time high at 7617, but failed to close above the 7600 psychological mark. That was the first indication that S&P 500 is now getting heavier and is now susceptible for a fall. And even in my first update and the midday update on Monday, I mentioned that S&P 500 will move up but will stuck within the 760X with limited chances of the 761X and will eventually fall below the 7600. And exactly was seen on Monday 1st of June 2026. Then finally on Tuesday 2nd of June 2026, S&P 500 for the first time managed to close above the 7600 at 7609.77, and the high or the current all-time high was 7620.90. And if you notice here, I mentioned that S&P 500 will try, and the maximum the S&P 500 can go for is the 762X level, and will stuck in the 762X and will then trade in between the 762X and the 759X. And then the things started to change, and this change is impacting the movement of the S&P 500 now and in the coming week and in the coming weeks, because on Wednesday the S&P 500 lost this level and gave a closing below this level on this day, 3rd of June 2026. And then we knew that on Thursday, on 4th of June, there will be a gap down open, and you can see that the closing below the 756X will be indicating a gap down open on Thursday. So there was the gap down open on Thursday, and there were heavy chances that on Friday, on 5th of June, there will be a very heavy fall profit booking. So it was clear that once there comes an hourly closing below the 7500, then S&P 500 will be coming down to the 7400 and the profit booking will continue. But now, because the S&P 500 has entered into the 7300 range and also the lower level charts of the S&P 500 are saturated, this means that we are expecting a gap down on Monday, or irrespective of any open and initial or intraday bearish movement. But the bearish movement will not be able to continue for long. Like before 12:30 p.m. Eastern time on Monday, we are expecting a reversal in the S&P 500. Now, to what level or up to what mark the reversal will be in the S&P 500, or at first how much it can come down before getting the reversal, what will be the condition for the bullish and bearish movement, and when this will be considered as the bubble burst, all of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of June 8th, means from June 8th, which is Monday, to June 12th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part is the technical part. In the technical part, I will cover the weekly and the daily charts. And through the weekly and the daily chart section, we will see if the long-term trend is still holding absolute bullish or not. What about the saturation or so? Daily chart means the short-term picture for 2 to 4 days, what we are expecting through the technicals. Second part is the probable movement. In the probable movement section, I will tell you what we are expecting, what kind of movement. Like first it will come down, then will move up, and will continue to move up, or will simply come down if it fails to hold and sustain at the strong support, strong resistance, this is the zone. And when it comes down, then what will be the support level? So this kind of movement in detail in the probable movement section, and it is recommended that you should watch both of these the sections in order to understand what is expected to happen in the S&P 500, Dow Jones, and in a manner to the entire US stock market in the coming week. So guys, first I am going to start with the technical part. Now guys, we are here, and this is the technical part section. In the technical, and I have divided the technical part section into two parts, the weekly chart and the daily chart. Okay, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now the candle, if you notice, this candle was responsible, or this candle has given an all-time high level in the S&P 500. Okay, but the same candle, the closing of the candle is below the open and the low of the previous candle, and also below the open and the closing of the previous candle, and is also below, I think this is 738583, yes, and is also below the open price of the weekly candle, that was there for the week of 11th of May. Okay, all of this indicates heavy bearishness and indicates a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, and also the bearish pressure for the entire week for the next week. Okay, now there is one more thing. If you notice, there is the moving average, the red moving average, you can see here in the picture. S&P 500, it is not just about the S&P 500, but any stock or any index. Okay, it cannot move far from the red moving average, and it has to come back to test and to hit the red moving average. For now, this red moving average is in the 7,200 range. This means that there are very good chances S&P 500 can come down to the 7,200 range to hit, test, and to respect the moving average, and then it can bounce back from here. Anyways, this I will discuss in the next section. Now, this is the chart of the Dow Jones. If you notice, in case of the Dow Jones, again, this candle, this weekly candle was responsible for the all-time high level in the Dow Jones, and the closing of the candle is just below the closing of the previous weekly candle. This is indicating an initial or intraday bearish movement on Monday, but is not indicating a gap down open on Monday. There will be bearish pressure, but that bearish pressure will be limited. The concept of the red and the moving averages will remain same as was seen in the S&P 500. A hit to the moving average is required so that the technicals we can say that the technicals have cooled down. And exactly similar to the S&P 500, the case, this is the case for the Nasdaq. Okay, exactly the same in the Nasdaq, but Nasdaq is much more heavier as compared to the S&P 500. Nasdaq is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, and not just on Monday, for the entire week Nasdaq is expected to remain bearish. Okay, now considering all of these the cases, it is clear that on Monday there will be a gap down open, or irrespective of any open there will be an initial or intraday bearish movement, and this bearish pressure will remain for the entire week in the next week. But this does not mean that market is going heavily bearish or so, as of now not. So for that, let's analyze the technical indicators. Let's analyze the chart through the technical indicators. So S&P 500 is still holding absolute bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the weekly chart, and the S&P 500 is still bullish through the MACD and is little bearish through the stochastic RSI, but that is fine. It is still holding in the bull side. S&P 500 is limited saturated and is limited overbought, means it is still overbought and it is still saturated, but it is not as it was in the previous week. In the previous week it was extremely saturated, extremely overbought. That was the reason we were expecting a heavy fall and the heavy profit booking. In this manner, the S&P 500 on the weekly chart is 90% bullish. The long-term trend is still bullish. There is no change in the long-term trend in the S&P 500. Now for the Dow Jones is almost the same. Dow Jones is bullish through the moving averages, Ichimoku cloud and the Bollinger Bands on the weekly chart. Dow Jones is bullish through the MACD and the stochastic RSI on the weekly chart. Dow Jones is absolute overbought, absolute saturated. Yes, so this is the problem. Next week also we are expecting the fall, we are expecting a red weekly candle because of the Dow Jones. Dow Jones is at the extreme saturation and the extreme overbought condition. Okay, so yes, technically the Dow Jones is 100% absolute bullish on the weekly chart, but it is extremely saturated and extremely overbought. So this means that the stock market, the entire US stock market is still holding bullish. The long-term trend is absolute bullish. There is no change in the long-term trend. For now, we are expecting the fall. This fall we are expecting not through the S&P 500, but we are expecting through the Dow Jones, right? So how soon we will be expecting this fall to happen? Okay, to what level will give the support to the S&P 500? For that, let's move on to the daily chart, because the daily chart will give us a very clear picture that how soon we are expecting all of this to happen. So now guys, we are here and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Now let's first analyze the candle. If you notice, it's a very heavy candle. This candle is responsible. It has not given an all-time high level, but this candle was responsible because this candle has erased all of the gains for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 10 days, whatever the gains were there for 10 days or for 11 days, this candle has erased all of these gains. This means that there is very heavy pressure and we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday because of this candle. Now let's analyze the last daily candle of the Dow Jones. This is the last daily candle. Now if you notice, well, it's not an absolute sandwich pattern, bearish sandwich pattern, but it's a partial sandwich pattern. Secondly, this candle has engulfed, not absolutely, but yes, like 80%, this candle has engulfed. The red candle has engulfed the green candle. Okay. And the green candle was in open equal to low condition, but the closing is below that. All of this is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. And exactly the same is seen in the Nasdaq, the same condition. Okay, the fall, the gap down open, and so. Now let's analyze the technical indicators to see if the index is out of the saturation or so. For the in terms of the technicals, S&P 500 is now neutral through the Bollinger Bands, is non-neutral through the moving averages, is still bullish through the Ichimoku cloud, and S&P 500 is bearish through the MACD on the daily chart, and is bearish through the stochastic RSI on the daily chart, and is out of all kind of saturation or the overbought, all of these are conditions. Okay. Now the most important part is this, that the S&P 500 is bearish through the MACD and is also bearish through the stochastic RSI. What does this mean? This means that there is bearish momentum in through the daily chart in case of the S&P 500. So all of this indicates that the S&P 500 is 60% bullish on the daily chart. On the weekly chart, S&P 500 was 90% bullish. Here it is 60% bullish. This means that still the long term and the short term trends are still bullish. Okay, there is no change in that. Now let's analyze the chart of the Dow Jones. Well, in case of the Dow Jones, if you notice, Dow Jones is still holding bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the daily chart, and the Dow Jones is still holding bullish through the MACD. This is the big thing on the daily chart, and is bearish through the stochastic RSI on the daily chart. So Dow Jones is much more bullish as compared to the S&P 500. Dow Jones is like 80% or more bullish on the daily chart, and Dow Jones is 100% bullish on the weekly chart. This indicates that Dow Jones is actually helping, or was helping, the entire US stock market to hold and trade bullish, absolute bullish. But at the same time, we have seen that on the weekly chart, the Dow Jones was struck, that the Dow Jones has hit and is at the absolute saturation, at the absolute overbought. Exactly the same condition was seen in the last week in the S&P 500. Because of that, we have seen that S&P 500 lost 3%, Nasdaq lost 5% within one day. Okay, and in case like if we calculate this the entire week, then this the fall in the Nasdaq was 4.6%, and the fall in the S&P 500 from here it was 2.8%. Okay, now the fall is indicated by the Dow Jones, not by the tech indices. But there was the question whether this is the bubble burst. Okay, then no, this is not the bubble burst. Yes, this can trigger a correction, okay, a short-term bearish cycle, but this is not the bubble burst. Now let's discuss the probable movement of the S&P 500, Dow Jones, and in a manner to the entire US stock market. Means what we are expecting, what will be the support and resistance levels and the zones, what kind of flow in the stock market we are expecting. So all of that I will cover in the next section, that is the probable movement. But guys, before that, I want to share this information with you that if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, it's not just about these the daily precise updates which I give to my Patreon community members, but I also give the opportunities in the premium stocks, up to like 50 to 100 opportunities in the premium stocks, the ETFs, the crypto, etc., with the explicit the markings. And also I gave the S&P 500 midweek update. It's a video technical analysis with precise levels, numbers, and the movements given every Wednesday. And guys, if you notice, many people have joined my Patreon community for last many weeks, months, and years, and they are getting these daily precise updates in the S&P 500, Dow Jones, and also they are getting the opportunities in the premium stocks and also the midweek update video technical analysis. And in order to join my Patreon community, you can follow the link that I've given in the description of the video and also in the comment section. Then you will see this is my Patreon page and this is my Patreon profile, and here you will see the membership options, this button. And when you click on this, the button that says membership options, then you will see that there are the 3 levels, 3 tiers. Now guys, I'm going to discuss the second and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500 in the coming week, and also in a manner to the entire US stock market, the week of June 8th. So first thing first, the data. On Wednesday, the inflation data will be released. Now this inflation data may not impact the movement of the stock market as such. Why? Because for now we have seen that in last 2 or 3 months since the war started, the S&P 500, not the S&P 500, but the Wall Street. Wall Street has not considered any kind of negative data. Okay, only the positive data was considered, no negative data was considered. This is why there are chances that even if the inflation data comes negative, then also the Wall Street may not consider the inflation data. Rather, it can continue its movement. Okay, whatever the movement that will be, okay, means at that time. However, if the data comes positive or supportive to the Wall Street, to the stock market, then we can see the resumption of the bullish movement and then back to the 7,600 or so. Now, let me clear the screen. So this means that this is the only data that will influence, if it has to influence, then this is the only data that will influence the movement of the stock market. Now in terms of the numbers, what we know is that S&P 500 has lost, the all-time high was 7620.90. It was around my level, and on this day, on Tuesday, I mentioned that the S&P 500, the movement, the upward movement will be restricted in the 762X and will trade in between 762X and 759X, because the 762X level will not be able to help the S&P 500 hold. Rather, it will be pushed back to the 7,600. But because the 7,600 from here, the 7,600 is like more than 3%. Secondly, S&P 500 has entered into the 7,300 range. So for now, 7,600 is out of the picture. So what now? So what will happen here? If you notice, the closing of the S&P 500 was below both of these, the red and the green moving average. Okay. Secondly, through the weekly and the daily charts, we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, that is also there. But because the lower level charts, the hourly charts, the 4 hourly charts are now oversold, not overbought, oversold, and are saturated. This means that even if there comes a fall, okay, for like 1 hour or so, it can hold, sustain, but not more than that, because eventually the S&P 500 will be pushed back. because it is extremely oversold and extremely saturated in the bearish side. So before 12:30 p.m. Eastern time, by or before 12:30 p.m. Eastern time on Monday, on 8th of June, S&P 500 will get its reversal. There will be an intraday reversal. Now this reversal may or may not be heavy. That's a different point, but there will be the reversal. Now what we know, there is one more thing, that through the Dow Jones, the weekly chart of the Dow Jones, we are expecting a good red candle, weekly candle, means by Friday, by next Friday, that will be June 12th, we are expecting a good red weekly candle because of the Dow Jones. Why? Because Dow Jones is extremely overbought and is extremely oversaturated. Okay, because of that, a weekly red candle is demanded. This means that even if the S&P 500 and the stock market, the entire US stock market try to move up, and it enters into the 7,400, then into the 7,500, then also it will remain heavily susceptible to come down and to trade red and to close below 7383.73, the last closing, okay, by Friday. But because the Dow Jones, okay, the components are different, and some components that are same, okay, the weight of those components like Nvidia, Microsoft, etc., it is much more in the S&P 500 and the Nasdaq as compared to the Dow Jones. This means that if the Dow Jones gives a heavy red candle, the weekly candle, then also the S&P 500 might not give a heavy red candle. Okay, there are very good chances that S&P 500 will close below 7383.73 by June 12th. Okay, but it may not give a heavy red candle, rather it may give a limited green candle. If there will be a green candle, that will be a limited green candle. Otherwise there will be a red candle, it may or may not be heavy. Okay, clear? Now first, the reversal. So as we are expecting a reversal by or before 12:30 p.m. Eastern time on June 8th on Monday, this reversal will face heavy resistance at 742x level, but the very heavy level is the 7,404x level. Now this 7,404x level is so heavy that only when there are continuous hourly closings above the 7,404x, we can expect the S&P 500 to hold and sustain and to even try for the 7,500. If not the same day, then maybe next day or the next to next day. But if there are no continuous hourly closings above the 7,404x, there is no sustained movement above the 7,404x, in that case, no, there won't be any sustained movement, there won't be any bullish movement to the 7,500. It will then move, means it will remain within the 7,400 range and then will fall back. So you can say like there will be a movement it will move up and then will come down, this kind of a staircase movement. Okay, let me just again, this kind of movement, this will be here, and the reason is strong. Because when Friday, when the S&P 500 was coming down, there was very heavy profit booking. Then also S&P 500 was supposed to hold at or around the 7,404x. Okay, it was hold like for 1 hour or 1 to 2 hours. But eventually gave up the 7,404x and came down and entered into the 7,300 range. Because 7,404x is the tiebreaker between the 7,300 and the 7,500. Okay. Now, the 7,404x, there are very fair chances, very good chances that the 7,404x level there will be a revisit. It will be retested. Okay. The 7,402x level, it is not as strong as the 7,404x level is. Now, this 7,404x level will tell us whether the S&P 500 is going to hold and sustain or will be thinking of the 7,500 or not. For the 7,500 and a movement above 7,500, okay, continuous hourly closings, continuous 4-hourly closings, continuous daily closings above the 7,404x is a must and it is non-negotiable. Okay, but yes, it will be tested. This is what we know. Okay, when there will be the bullish retrace. However, if the S&P 500 retraces and stucks around the 742x level, fails to move to the 7,404x, okay, it moves up, tests. Now it doesn't matter whether it has closed above the 742x or not. It has tested, okay, it might have even closed, but it has not tested the 7404x. This means that the bullish momentum is not much, is not heavy, and we are expecting a fall either in the in like 1 to 2 hours, okay, or the next day there will be the fall, because it has failed to move to the 7404x. That is why there will be a fall, and that fall will be demanded by the technicals. This is the importance of the 7404x. Now, what if all goes well? Let's say there comes the comments from the president, okay, or some good news from the Middle East, and everything, you know, goes well, and the S&P 500 holds and sustains above the 7404x. What will happen then? Well, in that case, what will happen? In that case, S&P 500 will try for the 7500 and is even allowed to enter into the 7500, but in the 7500 range. The S&P 500 won't be able to move up and will stuck into the 753x, and if not, then maximum it can move back to the 756x. What is 756x? The 756x level is the same level that was holding, and it was helping the S&P 500 to hold, to sustain, and to try for the 7600. And further on, even on Wednesday, the 756x level was seen, and there was the fall, the heavy gap down open on Thursday because of the 756x level, because the closing was below the 756x level. This means that now, even in the best case, if there comes a good reversal and all goes well, and there are continuous hourly closings and the daily closings above the 7404x, then also the S&P 500 can move to the 7500, and into the 7500 there is 753x, and then comes the 756x. This is it. That is the maximum in the bull side that we can expect for now, okay, provided the 7404x conditions are met. Furthermore, continuous closings above the 7404x, hourly closings and the daily closings, this is not a guarantee that the S&P 500 will be able to move to 7506x or 753x. No, because then there must come continuous hourly and the daily closings above the 7500. Otherwise, this is not possible. Otherwise, it will move to the 7500, enter into the 7500x or 751x, will fall, will close below the 7500, and will again come into the bearish condition, and then we will see again the profit booking and again the heavy fall. So 7505, so 7404x is a must for the bullish side to happen, and for absolute bullish to happen, 7500 is the must. Okay, for now 7600 we are not expecting, because we are expecting more bearish pressure. Okay, yes, there is one more thing, that even though we are expecting a good red candle in the Dow Jones, the weekly means by 12th of June 2026 Friday, the Dow Jones must give a good red weekly candle, otherwise it will not be out of the absolute saturation, and in that case it will create a condition for the bubble burst. Okay, we were expecting the bubble to burst through the tech indices, the S&P 500 and the Nasdaq, but then the Dow Jones will create that condition, and the bubble will burst sooner than expected. Okay, see, last time also repeatedly I mentioned that Nasdaq in the year 2000, when there was the dot-com bubble burst, Nasdaq lost 82% of its value, because dot-com means, okay, all of the technology sector, the tech companies, all of that. Then again, in the 2008 financial crisis, Nasdaq was the biggest loser. Nasdaq lost around 75% or 76%. Okay, in that the 2008 bubble burst. Okay, now is the AI bubble burst. Other than that, the debt bubble. Okay, one or two additional bubbles. So again, now we are expecting again more than 75% or even more than 80%, not 82 but 80% for the Nasdaq to lose when the bubble will burst. So if you are thinking that it is impossible, in that case you can look into the charts, okay, and calculate the top to bottom in the 2000 and 2008, and you yourself will see that these are the exact numbers, okay, the Nasdaq lost. Furthermore, if you do not want to visit the chart, then look into this, the red candle, heavy red candle on 5th of June Friday. How much Nasdaq lost? Almost 5% within one day. If the Nasdaq can lose 5% or even 6% within one day, okay, then this means that the 1 year cycle or 1.5 year cycle of the recession, Nasdaq is or will be in a condition to easily lose 75 to 80%. Okay, However, the Dow Jones will be the index that will be losing, okay, up to only 60% or 60 or 65% maximum, and not more than that during the bubble burst and the recession. Okay, anyways, that is the big thing. Now the bearish side. For the bearish side to happen, again the bearish side will be seen through the Dow Jones. Why the Dow Jones? Because the 50,000 psychological mark of the Dow Jones, okay, this will tell us how much bearishness we are expecting in the entire US stock market, whether there will be a short-term correction, okay, or the bubble will burst and then the recession cycle will start. Means how soon the bad things are going to happen. This will be known through the 50,000 psychological mark of the Dow Jones. And if you calculate from the last closing, the Dow Jones is like how much from 50,000? It is approx 1.7%. 1.7% of the Dow Jones means 2 or 2.25% in the S&P 500. This means that 7,200. Yes, 7,200 psychological mark of the S&P 500. So this coincides with the Dow Jones is 50,000. Okay, so this means, and how much that will be in the Nasdaq? Well, 2.25% in the S&P 500 means 3% approx. 3% we can calculate in the Nasdaq, and 3% will be from here up to 3%. So that will be around 2.8, 28,000 psychological mark. So 28,000 psychological mark in the Nasdaq, 28,000, 50,000 in the Dow Jones, and 7,200 in the S&P 500. This is what we can expect in the coming week. Okay, this is not the worst case. Okay, this is the normal scenario, not the bad case, but this is the normal scenario. But before the 7,200 can happen or can be seen in the S&P 500, the S&P 500 will have to lose the low of this candle, that was 7333.68. 7333.68. Now there is a level in the 7,300 range, 7,303x. There is a very strong level. This level and the 7,333.68, this creates a heavy support zone to the S&P 500, and this indicates that the short term, that immediate reversal before 12:30 p.m. Eastern time on Monday we are expecting in the S&P 500. This is most likely to happen at or above this zone, means the 7,303x, this range. It is expected to happen from here. Even, yes, there may come a little breach, but that will be perfectly okay, perfectly fine, not a problem. Okay, but that the reversal, okay, intraday reversal we are expecting, this reversal most likely to happen from here, around here. However, if there comes like a very heavy gap down open, it comes down and it enters into the 7,200 range, then we have 7 to 8x. Okay, then it will be able to reverse from the 7 to 8x, but the intraday reversal will be there. Again, why the intraday reversal will be there? Because the short term technicals, the hourly charts and the 4 hourly charts are heavily oversold and saturated. So there will be a reversal, an intraday reversal. There must come 1 or 2 at least hourly green closings, green candles, okay, green hourly candles, in order to come out of that saturation or so. Okay, but not less than that. Means continuous red candles, hourly candles are not allowed. Again, this reversal will be to what? This reversal back to the 742x, okay, and then the 7,404x. Okay, this the bullish side I have discussed here. Now only when the 7,303x, this is the zone, the strong support zone is lost, the S&P 500 will come into pressure, will come under heavy pressure, and we will expect more fall to happen in the S&P 500. And in that case, there will be the S&P 500 will enter into the 7,200 range. Now in the 7,200 range, what is there to hold the fall in the 7,200 range? Well, in the 7,200 we have 725x/6x. There is a zone 725x 6x. There is a strong support zone. This zone is strong enough to hold the fall. Okay, furthermore, just below this, we have 722x level. This means that if the fall continues and if the S&P 500 comes down, the 722x around here, 7,200, 2.5% fall, perfectly fine, it is allowed, and 7,200, 2x. So these are the strong support zones and the level. Strong, this is the zone, this is the level. Okay, when it enters into the 7,200 and fails to recover the 7,300 psychological mark, in that case the fall will be inevitable to this the zone. Loss of this zone means to this the support levels. Okay, now if the situation deteriorates furthermore, yes, before that, as long as S&P 500 is holding and sustaining in the 7,300, it is technically allowed to retrace back to the 7,400, but maximum to the 7,404x. Got it? Now, as long as it is trading within the 7,200 range, it is allowed to reverse or to get a reversal in the 7,300, but to the 7,303x and then the 7,303x. Then this will tell us if there is any more possibility for the bullish movement to the 7,400 or not. Okay, here. Now let's say if the situation deteriorates and S&P 500 is not holding and every day or every other day it is giving, you know, daily closings. What? The daily closing, not the hourly and 4 hourly. Hourly and 4 hourly closings, okay, they will just confirm, okay, that this is going to happen and the daily closing will be below that level or this level. Okay, if the situation turns bad or very bad and if the profit booking continues, it will enter into the 7,100 range. The 7,100 to the 7,150. Okay, these are the 50 points. The S&P 500 has created a consolidation. So there was the consolidation zone. Okay, these are the 50 point zone. So any kind of fall as of now or any kind of heavy profit booking as of now will be handled here, 7,100 to 7,150. Before that my level is there, okay, above the 7,150 and in between the 7,100 and 7,150. That level will be able to handle the fall no matter what. Okay, there will be only exceptional condition for the S&P 500 to come down to the 7,000 psychological mark. Okay, but for that to happen, the S&P 500 will have to come down and to close within the 7,200 range, maximum by Tuesday, not after that. Because when the S&P 500 comes down and closes within the 7,200 range, maximum by Tuesday, in that case it will automatically open the bearish side. When it opens the bearish side, then in that case, yes, there are like 80% chances, 80 to 85% chances that the fall will be handled here at the 7,100 and the 7,150. Okay, and there are like 10 to 20% chances that there will be more fall, and this more fall will be to or towards the 7,000 psychological mark. But as of now, S&P 500 is not going to lose the 7,000 psychological mark. Okay, because losing the 7,000 psychological mark means officially the bubble has burst. Okay, and now there will be the correction and then the recession. Bubble burst means the recession, but before that there will be the correction. Okay, 10%, 20%, and then the recession cycle will start, losing the 7,000. So even the manipulators or the market movers, okay, they will not let the S&P 500 lose the 7,000. So for now, S&P 500 will remain and trade within the 7,000 range. Okay, and not below that. Okay, means that not below 7,000. But you need not to worry about anything, because I will keep you posted. I will keep you updated through these daily precise updates every day from Monday through Friday. Okay, and if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, or if you have any suggestions, then please feel free to share your thoughts through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of June 8th.